Hi, this is Randy Finney with Right Side of the Chart, and this is an early market update for Tuesday, February 20th, 2024. It's 10:09 a.m. Eastern Time as I'm starting the video, so we're almost 40 minutes into the trading day. I'll keep this one brief, just an update on some of the recently highlighted trade ideas and the markets, and then I'll wrap it up. As you know, as I've been stating, we have the king of AI reporting earnings tonight, one of undoubtedly, unarguably, one of the most overloved, overowned stocks out there right now, and certainly one that has the potential to either continue the rally or put the brakes on it. And you know which way I'm going. Being short the stock as of yesterday and adding to that this morning right at the open. All right, let me go to give you a quick update on silver, but that one we hit, remember, which was my preferred target. I had we took this one 2 spots. I'm going to zoom in here there, and I had a zone to buy down to up to but not below 20, so we had another entry there. You could either actively trade it like I covered, and that was the final preferred swing target. And then on Friday's update, when we hit it, I had a showed a little arrow there if you wanted to game a quick pullback short, which is, it had been hit. That was I had that here. Well, let me show it to you. That would be right here. And so it's the most recent chart. I usually put them in order, and that was it right there. So little jog back to 2107. Now, again, dotted lines are not so sure. So that's it for me. Just, reversed it and covered that on the futures, a comparable level, and that's it. I'm going to stand aside that trade for now. Again, we're coming off a big divergent low, so there's a potential. And, you can also look at it this way. I didn't have the lines drawn like this, but I'll do it right now for you. From this point here, we started that divergence, that DL right there, that divergent low we had a bounce trade off of. Remember, this is big support. But if you draw that line, it's actually bigger divergence, except the problem is I'm just not crazy on the chart of gold, and silver's only going to go so far without gold. But yeah, again, if we come back down to 20, it's support. Right now, we're a little bit no man's land, a little stretched, to hit. And again, that was my preferred near-term swing target. So why, that's what I do sometimes. I just stand aside now and wait for the next objective setup. All right, that one's at IEP. Personally, I just got rid of it on Friday, I think it was. But, it was profitable, and it's going up, and it looks good, and they are scheduled to report. I'm not so sure. I don't have strong convictions on where this one goes. I'll maintain these targets, and I'll continue to provide updates on it. So it's, it's not a monster trade, but it's been a tough tape. Market's been going sideways. We're up 15% on that. So at the very least, maybe, raise your stops to assure a profit. At this point, the entry point was on the break above 1890. So I wouldn't let that slip away. And then again, keep in mind they have earnings. You might want to verify that date. Sometimes I've noticed on earnings.com, especially these a little bit more obscure companies, Apple, Amazon, they get it right. But sometimes the dates are off when I look, especially more than a couple weeks out. So just keep that in mind. I can't guarantee that's the actual date. If you want to know for sure, you go to the company's website, go to their shareholder information or stock information, and they usually have press releases they'll give out and they'll report. So anywho, it still looks good from a technical perspective, and it still has big potential. But as of now, if it pops on post earnings, it hits T3, that is the final target. If I say potential, that's, well, maybe we'll get there, and you could certainly hold out for that. But T3 is the bottom of this big old gap right here, and maybe, who knows. Anyway, if you have questions on it, or if I don't do frequent updates, feel free to bump me. Now let's talk the markets. Actually, when I put an IEP, it always makes me think of IEF. IEF is the 10-year Treasury bond, and my trading plan, not to oversimplify it, has been very simple, for lack of a better word. And, I've been harping on this for a while. The zones I gave you before we entered them, I give you yellow, orange, and red zone. You can read what they say there. And so that's it. And as long as the market's in the yellow zone, as you've heard me say lately, I've been stacking on short interest, and then I'll get even shorter, for lack of a better word, using a little finger quotations on the or more short, technically speaking, if and when we get into the orange zone. And if we get to the red zone, you won't be able to short, because I will literally have all the shares available from the brokers. So I'm just kidding. But that does happen in a downtrend. The especially the high flyers, less liquid stocks, you're always going to have shares of Apple to short if that's your thing. But that SMCI I shorted on Friday, that one, I wouldn't be surprised soon if everybody piles in, if it craters and there's no more shares available. But I'll get to that in a second. Right now, there are interactive brokers. If you guys trade it, there's a great little feature. You can add on your columns. I use the, what is it called? The classic TWS station layout, but one of the columns is shortable shares, and so if you just add that right next to your ticker symbol, it'll give you 3 color codes. Bright green means there's plenty of shares available. You can even hover over the green. It fills that whole column green and see how many literally at that minute they have available for you to short. And then dark green means none right now, you can't short it, but we might be able to get some soon. It's not that bad. And red means forget about it. There's no shares to be had, so come back later. And that is a thing. And when the markets are going down hard, or certain stocks, and that's one reason too I like to get in. I mentioned that on SMCI and even NVDA, both on Friday, before we had anything even remotely close to sell signals. They were both at, especially SMC all-time highs, and just it was the time. Just everything coming together, including but not limited to this. All this, all these 30, 40 plus minute videos I talk about, kind of a lot of factors are coming together. So we'll see. I can get clocked. I'm gonna ride them both. It's only NVIDIA reporting tonight, but again, please understand the importance of NVIDIA. It's been bulletproof for a long time. It may continue to be bulletproof, and that's not your cup of tea. Don't hold it into earnings. Just watch, learn. Same thing with the market or SOXX. I would, to me, the downside potential outweighs the upside. In other words, I think there's a better chance a stock drops 20% in short, order within, a day or two after earnings than it goes up 20%. Maybe I'm wrong. I can certainly survive that, move against me if it does rocket up. But I would doubt we're going to see anything like that, a 20% up after earnings. If it does, guess what? Don't put all your eggs in one basket. Don't put more. Quantify that. Use that profit loss calculator I created on the site. You can type in the number of shares you have and what your stop loss is, or your loss parameters. It'll tell you exactly in dollar terms. You put the share price in, and your risk reward and all that. Alrighty, let's go to, that's IEF. I just want to reiterate, they're well into the yellow zone, not even close to being out. Yeah, there was divergence, but the divergence is starting to burn through, and that's what I love to see. We were building on the 60-minute chart. Oh, sorry, somehow I got to a 2-hour time frame. This is a 60. Yep, we have PPI divergence. They burned through the RSI divergence, not the be-all, end-all. And look, if this starts creeping back up here, I'm going to be a little or a lot less eager to either add new shorts or stay short. But again, this is just one thing. And, the stock market and each stock, first and foremost, based on their own technicals. There is a scenario, and I've laid it out for a while now, that I can see, and I do believe at some point, where you're going to see the stock market, whether that starts tomorrow or today or whatever, or 6 months from now. But I do believe there'll be a point where the stock market's in the next big downdraft, whether you want to call it a correction or next leg down the bear market. Again, semantics. But that will be happening, and I think we'll see treasuries going up due to a flight to safety bid. So as of now, when treasuries go down, that's because yields are going up, and that's net bearish. But anywho, I just wanted to say, as of right now, I'm putting a pretty good weighting on this. And like I said, if we get back well into the green zone, it's going to temper my desire to short equities, unless I have a lot of good sell signals and clear reasons to be short. Hopefully that makes sense. So in other words, I'm not married to this one scenario. Short here, heavier short here, full in short here. It's just kind of a guidebook I'm using right now. With a, what I call a somewhat flexible and dynamic trading plan. Alrighty, let's talk the indexes now that we're on that. Let's go to QQQ. This is a 60-minute chart. There's our sell signal I've been waiting for forever and a day. Remember, that was a brief punch, but I covered there and said, we could bounce at the trend line. That's a sell signal. This is a 60-minute chart, but you have, as you can see here, we closed a solid, well, not a solid, but a decent 60-minute close below the trend line on Friday. That's that red candle right here. There's your close line. And now today, that's the first candle, but it's only really, in the 60-minute charts, the first candle's a 30-minute candle because there's 6.5 trading hours in a day. So 9:30 to 10 is the first candle. Then they're all 60-minute candles. But either way, so and we're at support right now. So they'll probably step in and buy it here, the dip buyers, and they'll do that until that stops working. And it's probably going to take a while. It's been a pretty resilient trend. So anyways, I just want to point out we're at support there. You got NVDA. So I don't expect the market to crater today. It would be great if it did, being that short. But yeah, there's still so much optimism and hope, especially on that stock, that again, if we are going to have a hard down coming soon, this is one potential for it. There's other things too, economic reports, or the trend just continues and continues and continues indefinitely, which we know it's not going to continue indefinitely, but maybe for the time being. This is my daily chart, my clean board on the daily. I'm going to tweak, like I said, these trend lines sometimes walk a little bit, drift, I call it. But either way I put it, that is a nice clean. There's a breakdown. The day is not over. Let me repeat that. The day is not over. This is a daily chart. All that matters is how you close the day. You can take a little or a big grain of salt and throw it in there with this breakdown, because NVIDIA is going to report tonight and has the potential. I wouldn't be short the stock. I wouldn't have shorted it yesterday and again today, and tell you that I plan to take it home tonight if I didn't think it was going to go down. But again, sometimes I think one thing in the market does the other, so do not follow me. It's not a follow me site. But if that happens, again, I'd rather have some, at least starter short exposure, which I've had now for, since really right here, that breakdown on swing positions. Just in case NVIDIA really gets the snot knocked out of it tonight and we see a big gap down tomorrow. Yes, it can go the other way. That's why it's not an all-in aggressive short moment just yet, in my opinion. But there is a sell signal right there. And as I always talk about, you can take a sell signal on faith. This is a breakdown below the primary uptrend line. And sometimes that works, and sometimes you just keep going. And that's the downside. Or you can wait for a solid daily close below. Again, you have NVIDIA tonight, so you might want to even wait till tomorrow. But, the downside of not taking a sell signal, especially when that's a pretty solid break right there. I mean, we're not right under the trend line. The problem is, by the end of the day, they can dump. And I'm going to this is what I do. This is what you pay me for. I give you my thoughts. I'm going to sit here and give you wishy-washy analysis. I think they're going to sell it today. I think it's going to be a pretty big down day. Why do I think that? Well, NVIDIA's best buddy, that whole, like I said, I didn't even know what SMCI was until somebody brought it up on Friday morning on the site. So yeah, now I know what they are. They're a big, a smaller company, but just huge AI hype, enormous AI hype around it. Again, you can read up on it, look at the chart. And supposedly the owner, the CEO of that company is buddy with NVIDIA CEO. And so they're like, everybody thinks, okay, well, these two are just locked in, perpetual success now. Anyway, my point I'm trying to make is this exposure. Let me get to those in a second. Let me just finish the charts here, and then I'll talk on those two. There's SPY. Again, I'm going to take this. There was a little trend line drift. I'm going to move it down. Why did I do that? See, I'm right at the bottom of this candle. The shadow, the skinny part, that one on the body, that one on the shadow, and now there's a breakdown in SPY. It's not a massive breakdown, but it is a breakdown. And as I like to say, a sell signal is a sell signal unless it's reversed. Okay, which means we move back, especially close back above the trend line. So that's it. I've been waiting now for how many months talking about these trend lines off the October lows. They just broke in QQQ. They just broke in SPY. I got an alert on the NASDAQ composite today. That is well under there. That's even better than, you can look at QQQE, which is also below QQQE. The equal weighted already broke down, back tested and got rejected. But what's nice about the NASDAQ composite, see, QQQE is still the same 100 largest companies in the NASDAQ. Whereas the NASDAQ composite is everything. It's got small, micro cap, mid caps, and it's thousands, over 1,000. I forget the exact number. I don't know. But it's a more representative. And so I've been waiting. Remember, in these recent videos, I said the odds will just increase if you see SPY. RSP long since stalled out the equal-weighted S&P 500. So we were really waiting on QQQ, SPY, the comp, NASDAQ composite here, which we got in QQQE, the semis, big sector. That's, you don't have to squint to see if it broke down. There's the primary trend line off the October lows. Very, very well defined, lots of reactions, and a breakdown. Surprise, surprise, right? With NVDA down today. And again, that's why I wanted to get in front of it on Friday. Bet you there's very few people in the world that would have shorted a stock with zero sell signals Friday, because I didn't want to wait and miss out now. And if I would have waited, then I'd be now I get the sell signal, but I'm already down 8%. I would have been an 8% less favorable entry, and I just hate that, because then you get a little snapback rally, and all this talk can be for naught. We could just tomorrow. But again, obviously I wouldn't have shorted it, and I wouldn't tell you I'm going to ride it in earnings if I didn't think it's going to go down. And I don't have enough to kill me if it does go up 20%. It'll hurt. Got a pretty decent chunk of that and the other one, but let's talk on those. So either way, that was the king of semis, and to me it's more of just one than one stock. Number one, it's one of the Mag 7. It's one of the largest companies in the world. Nevertheless, the S&P and NASDAQ 100, so you have that weighting there. But the psychological blow, and that's why I always talk in risk reward. Yes, shorting something in a stock, again, one of the most over-owned and overloved stocks, and one of the most resilient uptrends in years, is many might say it's just insane. It's just pure gambling. But again, I frame it in RR, because the risk reward, because the risk to the upside, I believe, based on the technicals and everything else at this point, to me, there's a weekly chart, is minimal. And there's my longer term target. So like I said, if this, if it rallies up and builds tomorrow during the regular session on any new highs and holds those, I will certainly communicate my thoughts. I'll let you know my thoughts either way after they report tonight. But I think the risk to me are the long side traders in this stock, especially those that bought recently and don't have very large embedded gains. I already shared my targets on it, but different boards. But again, I give you this 60 I got out to you this morning is just near-term targets. So there's a breakdown. There's the first one hit. We're below that support, 697.28. So that should open the door for another move down here. And we'll see. Let's not talk much more about it now. Either take it, don't take it, watch. But just know both the mathematical and psychological importance to the market on this one. Mathematical meaning because it is one of the highest, top weighted components, but then psychological because it is I believe the undisputed poster child of AI, and that's that. So let's move on. We'll watch it. We'll certainly know a lot more tomorrow, and then at that point, if there's any. Again, I'll share my thoughts. Maybe it's time to pull the plug, get out, take a loss, take a profit if it hits something. How bad could it get? Well, I'd be surprised not to see him buy at 637.65, but let me just try to quantify it now. From today's breakdown, that'd be a 12% drop. Well, there's my swing targets down there, and that's 31 from yesterday's breakdown. Oh, and that's just keep it very simple now. If you're on the same page as me, that's where, at minimum, I plan to swing this position down to unless I'm taken out of it, okay? But, and I don't even care if we get here. I might lighten up a little, but I will not close out a position unless, again, we rock it up, and I'll most likely wait till the regular session tomorrow, regardless of how high up we go there. All right, so that's NVIDIA, and then this one was just a little darling yesterday. shorting that right off the highs. And I said even then, if you missed it, I posted that in the comments section early on in this reply, but then I covered it in the video. Then we were on the trend line. We took out the trend line. We have a bearish engulfing candlestick. That in itself, I said yesterday, was an objective short with a stop over the highs because of that, and it just continues to go. So this is one, I kind of handcuffed myself to the desk on this one, and it's been paying off very handsomely. Already about a 34% gain, and not even halfway there. I told you clearly my target's down there, so if I'm correct, it's got another 50% downside to go. And again, this is why I'm doing this video, because I think today, maybe I'm wrong, the AI hype crowd, how could you not be a little concerned? Because this is what happens when everyone thinks a stock will never go down again, it's only going to go up, and the brokerage firms and big firms come out calling higher and higher price targets. And again, this guy may do that. One thing's guaranteed, I cannot lose on this. I'm going to have stops unless there's a massive gap up that bypasses a stop. That's the only thing on individual stocks. They don't have round-the-clock stops like futures do. But I think more and more NVDA traders and the bobbleheads on TV will start coming out and talking about this. And that I think, again, that's why I'm comfortable at the very least as a day trade going into NVIDIA earnings tonight. I have to imagine you're going to see some nervous profit taken for those that don't want this to happen. And by the way, this was not an earnings. This was not an earnings induced thing at all. It was just a parabolic move that appeared ripe to be done. And so we'll see what NVIDIA does with earnings. That's it, guys. I told you I'd keep it short. Let's keep it there. So that's it. So far, so good. The handful of trades, there haven't been a lot lately. Silver, we milked that on the way up, almost to the perfect turn. Traded that pullback, and we had another pullback we could have traded along the way. That IEP is still running, but again, if I'm right on what NVIDIA is going to do to the market after tonight, what I suspect, then I don't want to be in anything stock-wise with a ticker, including IEP. I just would rather have that out of there and have that dry powder ready to deploy in case it's one of those, things start happening fast and I want to, build a heavy position. So I'll wrap it up here. And as always, if you have any questions or want an opinion on something, put it in the comments section. I'll try to go back in. Friday's comments were pretty quiet. And again, I know it was a 3-day weekend. Markets were closed yesterday, of course, for I think it was President's Day. So, all right, guys, we'll pick it up later. This has been Randy Finney with Right Side of the Chart. Have a great day.